Hello Oracles. Well, Elon gave a warning to investors just about everything that is going on right now in the macro environment in a response to Pierre Ferragu's tweet that he put out. I'm going to run down the entire tweet that Pierre put out. I apologize, I cannot share it here. I just don't have the format to do it this morning. But I'll share that whole thing here, share what Elon had to say in response to this, so that you guys can take some of this information to just kind of give you guys a little perspective as to the situation that we are currently in. And so my video last night was not meant as a way to come out and, demean anyone or belittle anyone or just be negative in any manner. It was more of just a reminder of, we've been through very difficult times before. Personally, I have not, but I've spoken to many of you who have been long-term shareholders going through some even worse times in the past. And you said, this is something that we have gone through, and this is something that we know that we will get through and come stronger on the other side. So I just wanted to give you guys a little reminder about that. And to also remember that, yes, I would love a buyback. I thought we could see one this month as well. However, thinking about the reality of what's going on in the macro environment right now, even if we did get a buyback, it would really be a drop in the bucket. Look what happened when we got the split. We thought we'd get a nice rally into the split, a dip, and then we'd run from there. We talked about that cup and handle pattern that ended up breaking and we never got the run out of it. That's just the environment that we're currently in right now. So right now we are looking at a potential buyback, and if they did it, it might not actually do anything for the stock other than for a very short-term blip in a couple of days, and that might get just washed away quickly shortly thereafter. So just a reminder to put things into perspective and look a little bit longer term. And that's what the intention of last night's video was. So I apologize if I came off in a different manner, but that was not the intention. So running through Pierre's tweet, if you guys do not follow him, he is over on Twitter, Pierre Ferragu. He says, quick thoughts on what dragged down the Tesla stock this year and what to expect next in 10 tweets. 1. Must be put into context. 2/3 of it is the broader correction of longer duration growth names. 2. Twitter-related concerns number 1. Musk selling more shares. Twitter burn rate trough could be in the $2 to $3 billion range annualized, likely improving fast. Twitter could refinance $3 billion, negligible to the market cap and trading volumes of Tesla stock. 3. Twitter-related concern number 2. Brand. The Tesla stock brand is suffering from the current news flow, but the impact on the net favorability score is minimal. Likely temporary, remember Uber in 2017? Unlikely to affect hardcore fan who are most of the buyers in the market today. 4. Twitter-related concern number 3. Musk distracted. The man simultaneously driving and inspiring Tesla, SpaceX, The Boring Company, Neuralink, and OpenAI distracted by Twitter? Tesla is running smooth. Elon is still steering, but very hands-off already. This risk does not exist. 5. Demand concern 1. Tesla is ramping production 50% year over year. Some inventory buildup or marginal production adjustments, hence 20% of December Model Y in Shanghai, is 2 to 3% of quarterly volumes, are to be expected and should not be read as negative signals on demand. 6. Demand concerns 2. U.S. near term is tough as buyers wait for the 2023 subsidy. Tesla is addressing the problem with a temporary discount. It may cost a point of gross margin on the quarter. 7. Demand concern 3. Tesla is progressively reducing prices to boost demand and absorb capacity growth. It has the cost trajectory to do so without hurting gross margins. Subsidies in the US, localized production in Europe, 2 gigafactories ramping, absorbing fixed costs. Again, this goes back to the pricing power that we have been talking about. Tesla is continually bringing down costs, which means that they can bring down the price of their vehicles and still maintain those margins. 8. Musk stepping down. Tesla is now very well oiled, likely to evolve towards a SpaceX model. I could see Elon, low-touch CEO, Tom Zhu managing all global operations, tech and product leads still reporting to Elon. 9. Economic downturn. Could reduce delivery growth next year by 10 to 15 points from the approximately 50% level today and cost a few points of gross margins standing at approximately 30% today, while it would crush and bring to near bankruptcy incumbent manufacturers. A competitive accelerator for Tesla. And again, this is something that we have spoken about before, whereas Tesla is going to be the strongest player going forward, but if we get into a deep recession and harder economic times, it will actually put Tesla even further in the lead as we come out of this. So 10, in conclusion, well, remember, I don't make investment recommendations, I provide industry perspective and facts. This is what Pierre gave us here. And so Elon's response to this was, when there are macroeconomic risks, it is generally wise to avoid using margin loans on any company, as stocks may move in ways that are decoupled from their long-term potential. So again, this is just Elon kind of giving us that little reminder that due to these difficult economic times right now, we are seeing a stock price that is significantly decoupled from the potential of the company in the future. Again, we talk about it all the time on here, not financial advice, but when you see a company that is trading so far below its fundamental potential for the future, that is an amazing buying opportunity. That's what I'm taking this as. I continue to buy. So this right here is just Elon's kind of reminder to us all that this is a decoupled situation where the stock price itself is not reflecting the future potential of the company. So yes, I know it stinks again right now that the stock price is where it is, but we can be grateful for these times for the buying opportunity, or we can just be upset because the stock price isn't where we want it to be right now. That's really kind of where we're at. And going back to my discussion about the buybacks earlier, we can have a temporary fix in the stock price, but what do you truly want when it comes to the company and your portfolio? Do you want a short little injection that's going to make you happy in the moment? Or do you want the company to actually grow and continue to grow fundamentally so that down the road in the future, we will have actual true growth of the stock price and have that performance and the stock price relate to that performance? And so now, speaking of the macro environment, today at 8:30 a.m. Eastern Time, we are going to be getting the PPI data coming out. Expectations are 0.2% month over month and 7.2% year over year. Last month, we had an expectation of 8.3 and we came in at an 8.0. We have been trending down since June. So this is a very good direction that we are moving. So yes, I would love to hit the 7.2 number. I would love to actually have a 6 in front of it if we could. 6.9, 69% to end the year would be absolutely amazing and ironic, but we will see how we go. I think either way, as long as we come in under 8%, that still shows the continued trend downward. Of course, if we come in anything over 7.2%, the market may freak out and we might end up getting a sell-off. So just pay attention to that. I think the movements we get today in the stock market and the stock price for Tesla are going to mostly be related to what we see in the PPI data. By the time you guys watch this, that data will most likely be out and we will see the reaction. So let me know your thoughts in the comments below. What do you think about what Pierre shared with all of us? Because for me, it gave a great perspective as to what we can see going in the future. And again, it just reiterates everything I've been basically saying all year long when it comes to Tesla, the stock, the price not matching the fundamentals, and how a potential deeper recession could actually be even better for the company going forward. Just a reminder, tonight we are going to be having our second ladies night. We have Jen Strahan, Foskai, and Amy, aka Tesla Proud, coming on. Going to be very excited about that. Tomorrow morning we have Curious Pedgy, who is going to be on the channel as well at 10 a.m. Eastern Time. So I look forward to seeing all of you guys tonight. Join us, bring your glasses of wine or whatever drinks you want to have if you are someone who drinks. Otherwise, we'll be having a wonderful evening at happy hour. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTem1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.